Hey everybody, Boris, Forex. Welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, October 9th, October 13th, 2017. And again, this week is going to be very, very quiet. There's literally almost nothing on the major side and very, very little on the commodity side. Just basically RBA, Financial Stability Review, is about the only thing that's on the commodity dollar side. The levels have actually moved, and that's the interesting part here. Aussie now, in my opinion, has become a clear sell with 80, very much a cement ceiling. Support now at 77, but it really looks to be a sell the rally type of a trade with 80 a big failure. I'll go into the charts and show you why. Dollar CAD also kind of interesting because even though the 26 has been a pretty serious resistance, 24 is pretty serious support here. And I think if 26 breaks to the upside, dollar CAD really has more to go, maybe 20, 27, 28 as it moves higher. And Kiwi, weaker, but support here at 70 is very solid. So I think Kiwi probably has the least amount of downside to go as we go forward. Let's take a look at the calendar, just see what's on the plate. It's actually quite little. You can see that we don't even have, the only thing we really have is actually non-commodity based, which is the Chinese trade data, which will be interesting to see whether the pickup in Chinese activity is really continues. And that may be mildly positive to calm dollars if they print a little stronger than expected, but we'll have to see. The only other thing that's on the calendar, I believe, where's the Australian, the RBA? It's not even on this. It's not even on this calendar, but trust me, it is on the calendar. It's on a different calendar. The RBA Financial Stability Review, I believe that's on Thursday. That's about the only other thing that's on the calendar as far as calm dollars go. Everything else here is all related to the majors, so we don't really have any risk next week that could be catalytic, and it's really going to be very much a trade on pro-dollar, anti-dollar flows in some ways. Let's take a look at the charts here. I want to start with the Aussie here in the weekly. So the Aussie weekly clearly shows a double top formation here at the 80s, which is why I say the whole 70s right now. Aussie really becomes a very clear sell the rally trade with 80 a pretty serious resist point as we go. Aussie also has more downside pull here, although former resistance now becomes current support at this 77 level. So there's clearly going to be sort of, I think, two-way trade right around here. And 77 probably will prove to be a pretty decent support level. So to me, it's a sort of a very, very quiet, non-directional move here, unless we kind of break back up, at which point I definitely want to sell any kind of rally that comes in here, because I really believe that longer term, it's going to resolve to the downside as we've put in a major top formation on the Aussie. The story with the Aussie, as is the story, by the way, with the Kiwi, which I can take a look at next, is sort of the outflow of the carry. The only thing that turns these things around is if the market becomes completely convinced that the Fed is not going to raise rates in December, and perhaps even not even raise rates like into the Q1 of 2018. In other words, if the whole interest rate differential story of the U.S. Gets turned upside down, the 10-year goes below 2, so on and so forth. That's a very, very small probability at this point. It really looks like the 2 years is going to go to 2.5. The rates are definitely going to get spiked in December, even if there's sort of a spacing out by a quarter for each quarter basis point hike. It's still going to create a positive yield, a negative yield differential between the carries. And I think what you're seeing is a slow seeping of air out of all the carry trades. Kiwi also looking pretty negative here, although the 70 support level, both psychologically and technically pretty strong. I would actually say it's probably 69.50 to 70 that is the more stronger area. So again, a fall down into this area probably creates more of a buy opportunity, at least for a short-term bounce, than a sell, which is why I'm not reluctant to really want to get too short this trade in and of itself. And Caddy is, in my opinion, a very strong sell, a pretty strong buy actually at these points, but perhaps on a retrace. The story here is I think the market underappreciates, and I'm probably arguing more of a fundamental case than I am a technical one, although you could see the technical is a pretty nice strong V-shaped bounce. So yes, we possibly could come down to 24s. I guess my point is, the true technical trade here that I would love to see is a buy of any kind of a dip down to 24s, because I think this low holds, and I think any kind of a dip into this buy is going to create a higher low with a potential for a move back up. Oil is below 50. Canadian data is not great, or not great enough for the Bank of Canada to really raise rates any further. And the strengthening of the Canadian dollar, I think, is starting to really hurt trade across the border in the north here. and that is going to have an impact on monetary policy going forward. So yeah, I'm kind of talking in my book here. You could make a case technically that's kind of getting exhausted at this 25, 26 level, which in fact it is, and some correction is due. But I guess my point is I'm a buyer of this correction because I'm a believer that this bottom is going to hold and that ultimately we get higher prices in CAD. But overall, you can really see just the blasé nature of the charts here. There isn't any kind of strong impulse moves one way or the other. It creates a kind of a very low volatility environment that clearly, to me, the calm dollars are going to still remain relatively low volatility environment unless we get some sort of major unexpected move in yields on the U.S. side that could have radical changes on the calm dollars. But for now, the calm dollars are taking second stage, as they have been very much this whole month. And there's very little interesting trade here unless you just sort of want to trade small, low volatility ideas, which I'm not really a lover of. So that's kind of how the calm dollars shape up. Not much to say, except I think the strongest trade, in my opinion, here is the short Aussie against any kind of a rally into the 80s, because ultimately I think this thing really has shown itself to have rolled over, and the trend is to the downside. And ultimately, we're probably going to go to 75. So I like selling anything here with a stop above 80 in case I'm wrong. That's how the week shapes up. Wish you guys the best luck, the best trading. Boris Landsberg, over now.